Today we're going to talk about Shopify and their Q1 earnings report. This is a stock that is down almost 25% since reporting their earnings a couple days ago. So in this video, we will take a look at their full report, and I'll give my opinion on whether Shopify is a buy, a hold, or even a sell. So if you enjoy the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. As I mentioned in the intro, Shopify is down almost 25% in just the last couple of trading days. And year to date, this stock is down around 20%. However, from its high of $90 achieved back in February, the stock price has dropped over 35%. And looking at Shopify over the course of the last year, the stock price is now the lowest we have seen since November of last year, and is only about $10 off of their 52-week low. The last 5 years for Shopify have been very up and down. In 2022, the stock was trading around $26. Since then, it's gone on a nice run, up about 126%. However, the stock was trading at $170 a year prior in 2021. A lot of this having to do with the pandemic driving a lot of businesses online and thus leading to a big boost in Shopify's business. Ultimately, Shopify looked to capitalize on this boost in their business by expanding into logistics. This was a play to compete with companies like Amazon by providing delivery services for the businesses that were using Shopify. However, investors did not like this move, and they sent the stock lower and lower over the course of the next year. Ultimately, logistics is a very capital-intensive market, and this is something we have even seen from Amazon over the course of the last couple of years, with a massive hit to their profitability as they look to expand their warehouses. And investors saw this as having a very similar effect on Shopify. If they were going to get into this business, it was going to require a lot of money at a time where interest rates were skyrocketing. Ultimately, Shopify made the decision last year to exit the logistics business, and this helped reassure investors that they were making the right moves for the long-term prosperity of the underlying business. With Shopify now 1 year out from offloading their logistics business, a lot of investors were looking at this quarter with high hopes around the numbers that they would report. And on the surface level, their numbers look very solid. They came in with an EPS beat of about 18%, reporting 20 cents compared to an expected 17 cents. Their revenue also had a slight beat, reporting $1.86 billion of top-line revenue. This revenue number represents a growth of 23% year over year. And if you actually discount the fact that they had revenue coming in from their logistics business, it actually represents a growth of 29% year over year. Gross payments volume also saw significant growth, growing from $27.5 billion in the first quarter of 2023 to $36.2 billion in the first quarter of 2024. Shopify also saw their monthly recurring revenue increase 32% to $151 million. This is super important. Monthly recurring revenue is something that investors take very serious because a lot of businesses as well as individuals, once they get into a subscription-based model, it is hard for them to change away from it, especially when you're talking about businesses that are using a platform like Shopify. They build out their storefront on Shopify, and at that point, it's very difficult for them to go to a different platform. And this is something that investors like a lot because you can count on this monthly recurring revenue to at the very least stay stable, if not increase over time. They also saw their gross margin increase to 51.4% compared to 47.5%. This change is primarily being driven by the fact that there was an impact from their logistics business that was negatively affecting their gross margin. Shopify provided some very interesting guidance for 2024, and it really is slightly leaning to the negative side. However, there are some slight positives that we can find in here as well. Like for instance, their gross margin should increase because they no longer have the logistics business, and they're expecting this margin to increase by anywhere from 200 to 300 basis points compared to the second quarter of 2023. However, they will see a negative impact on their revenue. This is going to be a headwind of around 300 to 400 basis points, as they will no longer have revenue coming in from their logistics business. And ultimately, this headwind in revenue affected analysts' expectations around the company. They were expecting revenue to grow 20 to 30% in Q2. However, the forecast from Shopify is that they're only going to grow their revenue in the high teens on a year-over-year basis. And despite the logistics business no longer being part of the company, they're still expecting their gross margin in Q2 to decrease by about 50 basis points compared to Q1 of 2024. On top of all of that, Shopify is expecting their expenses to increase in the low to mid-single digits on a quarter-over-quarter basis. We're not talking about a year-over-year basis. We're saying from Q1 of 2024 to Q2 of 2024, they're expecting their expenses to increase by anywhere from 2 to 5%. And I think part of the reason this guidance has been so surprising to Shopify investors has to do with what we have seen from companies like Amazon. This is the EPS numbers from Amazon over the course of the last 5 years. And we can see in 2021 and 2022, Amazon was investing heavily into their warehouse and logistics base of their business. And this actually drove down their EPS numbers in a very significant way, actually going negative at the end of 2022. However, since this time, Amazon has really turned around their business and focusing a lot more heavily on profitability. And they have driven up their EPS numbers to a trailing 12-month EPS of $2.90. This is almost as high as we saw it before they started investing heavily into their logistics business. And I think Shopify investors were expecting something similar from the company. And in contrast, here we can see Shopify's EPS numbers. In 2021, they brought in $2.68 in trailing 12-month EPS. However, they purchased a logistics business, they invested heavily into it, and this drove their EPS number all the way down to negative $2.73. And since they have now sold off that logistics company, they've trended back towards positive EPS numbers. However, we haven't seen the same results that we saw back in 2021. When you look a little deeper into Shopify's EPS numbers for this quarter, there is some concern because yes, they did report a positive 20 cents of non-GAAP EPS. However, when you subtract out things like stock-based compensation as well as some other investments, they actually had a GAAP EPS of negative 21 cents per share. And compared to last year when they reported positive 5 cents of GAAP EPS, this is not a trend you want to see. You don't want to see a company's GAAP EPS numbers going more into the negative. So right now, what we are seeing from Shopify is a lot of investors were expecting them to continue their run of profitability. However, with them posting a negative quarter of GAAP EPS, this has brought concerns about whether the company can actually sustain profitability. So overall, when I look at Shopify's results, I think that this is a question of profitability and not growth. They're still able to grow their numbers in a very significant way, 20 to 30% year over year. That is going to be very positive for a company like Shopify. However, profitability is a big question, especially right now in this market. Investors are looking for businesses that have a very consistent trend of profitability as well as increasing that profitability. And Shopify right now has not shown their ability to get there. With a lot of investors seeing them divest their logistics business, they were expecting this company to get back to profitability in a very meaningful way, similar to what we saw from Amazon. However, so far that has not been the case. So personally, when I see a dip in a stock like this, I see it as a potential very nice buying opportunity. When you look at the last couple of quarters, they posted positive 50 cents of EPS in both of them. And then back in 2021, they were posting anywhere around 69 cents to $1 of EPS in a quarter. And the last couple of years, we've really only seen these negative EPS numbers due to the investments they've had to make in their logistics company. And I think that ultimately, with that now behind them and them focusing on their core business, they should be able to drive back towards profitability over the next 1 to 2 years. So personally, I'm going to be paying attention to Shopify over the course of the next week to see if it falls even further. If it falls down to around the $50 mark, I think I'll look to add a position in Shopify. I really like the company. I think they have a large market that they can capitalize on, and it's not going anywhere anytime soon. But keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all of that said, I hope you enjoyed the video. If it did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what do you call a deer with no eyes? Check the comments down below for the answer. Thanks for watching.